Welcome to the new video of Decoding IPOs by Finance and Investment Cell of Kirori College. So today we will be decoding IPO of Smartworks Coworking Spaces Limited. So let's move on to the IPO details. So about the company was incorporated in 2015 and it is engaged in the businesses of customizable managed workspace solutions. It offers tech-enabled office environments to Indian corporates, MNCs and startups, and it offers amenities like cafeterias, gyms, and medical centers for employee well-being with aesthetic designs. And as of 31st March 2025, company serves 738 clients and currently it has 728 clients. And as of March 31st, 24, the company holds 4 of India's 5 largest lease centers, including the 0.7 million square feet Vaishnavi Tech Park in Bangalore, surpassing other campuses in size. So moving about the industry analysis, as we see that companies engage in businesses of managing co-working spaces, so it would be better to understand the demand drivers of these workspaces, such as number of global capability centers in India, the revenue that has been generated from it, number of employees working in global capability centers, rise of unicorns, and office stock in top 9 cities of India. So as you can see, number of global capability centers has increased from financial year 2019 to 24, and it's projected to increase at 4 to 5%. And about the revenue is estimated to increase at 9 to 10%, and the number of employees working in global capability centers is estimated to increase by 6 to 8%, and number of unicorns in India currently at the first quarter of 2025 is estimated to be 118. And as you can see in the India top 9 cities, the office stock majorly is concentrated in Bangalore at 25.6%, followed by Mumbai 17.4%, then Hyderabad, and the total office stock in India is 833 million square feet. So as we can see, due to increase in global capability centers, increase in number of employees, number of unicorns, and increasing demand of co-working spaces, the company will have their customers. So now coming about the IPO details. So the IPO was open at Thursday, July 10th of 2025, and the IPO will be closing on Monday, July 14th of 2025, with a tentative allotment on July 15th and tentative listing date as Thursday, July 17th. And about the IPO, the issue price band is 387 rupees to 407 rupees per share. The lot size being 36 shares, and the sale type is a fresh issue come offer for sale. So out of 582.56 crores that the company is offering with 1 crore 43 lakhs 13,400 shares, out of this 445 crores is a fresh issue, which means all the proceeds will go to the company, and 137.56 crores are offer for sale, which means promoters are selling their equity. And about the application for the retail investors, minimum lot size is 1, maximum is 13, with the initial investment required of 14,652 rupees. And as you can see, QIB shares offered were 49.65%, NII were offered 14.89%, with retail shares offered at 34.75%, and employee shares are 0.71. And there's an employee discount of 37 rupees per share. So moving about the objectives of issue. So company has proceed that prepayment of certain borrowings that have been availed by the company. 114 crores will be used for the same, and capital expenditure for fit outs in new centers and for their security deposits at new center. The company would be using 225 crores for the same, and rest for the general corporate purposes. Now about the key financials of the company. As you can see, there's a strong revenue growth. Revenue has increased from 7,113 million in financial year 23 to 14,009 million in 31st March 2025. There's a high return on capital employed. In the financial year 25, return on capital employed was 65.51%, which indicated efficient capital utilization. There's an efficient trade receivables by the company. His receivable turnover ratio was greater than 69 for 3 years, which reflects excellent collection efficiency. And the enterprise focus strategy. Smartworks focuses on clients needing over 300 seats, reducing churn and increasing revenue predictability. And then technology and capital efficiency. Their integrated tech platform enhances customer experiences. But one thing that you can observe is that profit after tax, it has been company has been making losses since March 23, as we can see. And now Moving to the other slide, as you can see there that despite the high revenue growth and high return on capital employed, company has been making significant losses from consecutive years, and now there are things that are needed to be taken care of. Firstly, there's significant dependence on single or few customers. As you can see, in 2025 alone, the top five customers constituted about 12.52% of their revenue, with top three clients contributed about 9.14% of their total revenue. And as you can see, current ratio is 0.21, which shows the very pure liquidity, and it is below the healthy benchmark of 1. And as you can see, the debt to equity ratio is 3.69, which is highly leveraged. And since you can see net profit margin and net capital turnover, it is negative due to the working capital deficit, and the company has been making losses. And though there's a good return on capital employed, but debt to service coverage ratio indicates challenging in coverage debt servicing. So as you can see, low liquidity, which is far below the healthy benchmark of 1. There's a high leverage, which provides a risky capital structure, exposing the firm to interest rate fluctuations. And the return on equity is negative 0.8, which means shareholders are not earning anything from their capitals. And although the company is significantly dependent on few customers, so any one of them, losing a few customers may affect the revenue strongly. Now, the competitor analysis. One of the major competitors of Smartwork is Office, and as you can see, Office is a more mature, profitable company, and it has already established the investor trust with a sustainable market capitalization. As you can see, the earning per share for Office is positive, whereas Smartworks is that of negative because again the company is incurring losses. Same with the return on net worth. It's negative for Smartworks and positive for Office, and for the P/E ratio, since the company is not listed yet, for the Office it's 63.18, which shows that it is more mature. Although Smartworks larger in revenue, it lags significantly in earning and return matrices. So now, considering the grey market premium, the GMP is trading between 30 to 34 rupees per share, which indicates a 7 to 8.3% premium over the 407 upper price band. As per the Economic Times report, GMP stands at 30 to 32 rupees, which marks a 7.4% premium. And about the Republic Word mentions, the GMP stands at 34 rupees, which marks a 8.35% expected listing gains. So, few key takeaways. The 7 to 8% GMP signals strong expectation of sharp listing gains, but GMP is speculative. It reflects hype more than the fundamentals of the company. As we can see, the company has increased their revenue, but their losses, it has been making consistent losses, and their return matrices are quite low. And analysts remain divided. Some see long-term value and other wants for the financial risk. So now, what would be a final verdict? Firstly, Smartwork shows strong revenue growth and market presence, but continuous losses, high debt, and weak liquidity raises red flag. And despite their competitors are profitable and they are more mature, so despite a positive GMP of 34 rupees, fundamentals remain shaky. So for the risk takers, they may consider it for the listing gains, but for the conservative and long-term investors, they should avoid and wait for the financial stability till the point company has started earning profits. So as you can see again, the net profit margin is in negative, and the company might face challenges in covering their debt servicing, and there's a high leverage and concentration on only few customers. So these things are to be taken care of, and be cautious. Thank you.